Hey everyone, today we are going to talk about how to choose the optimal expiration cycle and the strike price for your option strategy. And this works for any strategy. I go for risk defined first. If I'm a beginner, this is a step-by-step guide. If I was just starting out, what would I do with my expiration cycles and the expiration date and how to pick the optimal strike price for your strategy. There's a couple of different things that you should know. Some are undefined risk strategies like short puts, strangles, and straddles. Then there are risk defined strategies, which are credit spreads, short calls, cover calls on your stock, other types of iron condors. Anything that involves a short leg and a long leg defines the risk of the strategy. So today's video is all about showing you how I choose the optimal strike and the optimal expiration cycle for my strategies. In my paper trading account, I already have an Apple stock, which I bought a couple of months ago at $200, right? There is something there to show you. And then let's choose if I wanted to sell a covered call on this stock. What would I do? How would I look at the whole situation? Does it even make sense to sell a covered call right now? So let's dive into the platform and I'll take you through the step-by-step guide of what would I have done if I was holding this stock position, if I wanted to earn some extra money, like earn some premium by selling some calls, or if I want to let the stock go away from me at a certain point or at a certain strike. And that only happens if you have a price target in your mind. So let's say I bought it for 200, my price target is like 25% up, 30% up, whatever that case is. I am willing to let that go away at 30% mark or a 40% mark. So at that point, what would I do with that position? Will I sell? Will I buy more? Will I buy less? Anyway, let's take a look here. So I have this Apple stock. You can just see this. This is my paper trading accounts. Just be mindful of that. It's easy for me to show strategies in this account versus my real account. I do sometimes make videos on my real account when I'm ready to put the trade on, and I've done it in the past. You can check my YouTube channel. There's a lot of videos on it. But today, I don't see a real position that I can take on. So I'm just working on my paper trading account to show you guys how does it work. The first thing to note here is my P&L is up 30%. So what I mean by that is traded the stock at 200, it's trading at 257. That's a 30% jump. Now, am I okay with selling this or letting this stock go away from me at this point? Probably. It has run its course, I believe, and I'm done with like allocating capital here. I can take my capital back from here, sell the stock, and put it somewhere else where I think the growth is bigger. Okay, so what do I do in that case? I would go and look for now my cost basis is 200. Just remember that. Slightly lower than that because I've sold some calls in the past on this, demonstrated on videos. So the cost basis is probably around 197 or 198. Okay, but let's take it as 200. And then what would I do? If you want to take your options trading further, please check my 5-day option trading challenge in which I show you how to trade calls, short puts, and then spreads. Also, don't forget to hit like and subscribe to the channel. Now let's get back to the video. I would open up all the option chains underlying ticker, which is Apple. Right. Let's see what is available here. If I was holding a stock at $200, as liquid as Apple, as liquid as one of the top indicators that you can, one of the top tickers you can get into, what would I do? My go-to is 45 to 50-day cycles. So that's my long-term strategy. I do have some zero DTE option strategies as well, but long-term, this is what I go for. 45 days out, 17 delta short option, and just let it decay. Let's see how that goes. So there's a 44-day cycle here available, right? Select all the strikes. Now look at this column, look at volume and open interest, big numbers here, thousands. This is what we like to see. The stock and the position should have thousands of open interest and volume on a daily basis. And let's pick up a delta. Now, the next most important part is to look up a delta for a strike. Like I said, my go-to is between 15 and 20. I have a strike at 15. Let's see how much I can collect. I'm collecting about 163 on this. Sorry, 160, because when you sell a stock, when you sell an option, you sell it on the bid. So the bid price is 160. So that's what you will collect. She sold this strike on this stock. Okay, so that's not a bad option for me. The next one up is 232. That's a 20 delta strike. For the risk reward purposes, I think this makes more sense right now at a 233 strike premium. So let's take that strike and then let's sell a call option on this position. So you would right click and then you will sell a single option. Okay, you're not doing any verticals, anything complex, none of these strategies. You're just selling a single option on your stock, which you have been holding for a while, which you loved, you like, it's been in your portfolio for a long time. Now, how many of these options should I sell? That's the bigger question. This is what I get all the time. We should only be selling one option for every 100 stock that you hold because that's how the option market works. One option contract will control 100 stock of your position. So I only have 100 Apple stocks, so I'm only going to sell one option on it. If you have 200, you can sell two. Just remember, if you have 100 stock and if you're selling two call options, then you would have to pay up to initiate that position. The broker will charge you margin to open up that position. So if you don't want that to happen, you should stay one for one. What what I mean by that is if you have 100 stock, sell one option. That's it. Okay, so I'm collecting $233 here. Let's take a look at the chart first. So right click on the Analyze tab. See how the overall position looks and what are your Greeks looking like. So 11/22, make sure you change the date there and then you change the tail date on top here as well. Okay, now the stock is currently trading at 257 and you are selling a strike at $280, right? So that's your strike, 280. That's a good number. So if you got into this position when I did, which was at 200, now you're selling it back into the market at 280. That's an $80 jump. Times that by 100, that's $8,000 on this position. How much capital did I lock up here? You can do the math. 200 price and 100 was the quantity. So that's $20,000, right? But the broker charges you 50% of that. So that's 10,000. Now you collected quite a bit of money on this. I think you can see the margin numbers here as well. If you see the buying power effect is not coming up. Maybe if I open up here. No, it doesn't show you here, but you can do the math, right? Trade this, analyze this, and then let's take a look at the chart. So you're collecting a total of, you should take out the stock price first and then see how the cover call looks. We are almost covered on the upside, meaning that's what the market is expecting it to move at. The expected move basically comes from the volatility in this stock, and you can see that from here, $20. So between now and the next 45 days, what the volatility is telling us is that this stock is expected to move $20, either up or down, plus minus $20. That's what it means. And the volatility right now is 28%, meaning the vol is slightly lower. Also, don't forget to hit like and subscribe to the channel. Now let's get back to the video. I think I've seen this stock at like 30% vol, 35% vol, but right now it's 28 because the market is like really bullish. Further out you go, the bigger the expected move becomes. So you should always look at what is the market expected to do based on the volatility of the underlying ticker. From here, you would go on to the trade tab, analyze tab. If everything looks fine, you have an 89% chance. I think this is coming up as wrong. This number, because it's a pre trading account, this number at 99% is not right. This number should be around, if you're above 70, you should be good because that's what we trade at. Probability-based trading means 70% of the time you were expected to win, 30% of the time you're expected to lose. That's the number we select. And that comes from the strike delta that we chose. We chose 20 strike, meaning we have a 20% chance of losing in this trade and 80% chance of winning. So that's what that number is. This number should have shown 80%, not 90. Okay. That's what it should have been. The next thing is I'm collecting $233. I'm going to be paying 65 cents for my trade. Right click and confirm. So you're paying 65 cents here. Expected total collection is 232, and that's how you choose it. Send the trade in. Now, how to manage this cover call? Couple of things. If the stock goes up and goes through the short strike of 280, you've already made your mind up to let the stock go at 280. So what that means is you can take it from here, select the strike, and let it go if it goes through your short strike. And you will keep anything between now and 280. That's the stock appreciation that you will keep. Plus, you will also keep this 233. So that's the amount of total net profit you will collect from this trade. The other thing is, if you don't want the stop select to go away from you, you can close this call option here if it gets closer to your strike. Let's say you started at 20 and it is at 40 or 35. 35 is my number between 30 and 35. 40, as soon as it gets close to 40, that's when I would start to manage the position. And the way you would manage is you would close the call option right now and you would move it further out in time. And you would get a better credit because the market has then moved up. If the market goes down, it's a win-win because then you collect all the premium and you can reinitiate this position when the market settles down a little bit more. Okay. So those are a couple of things that I would do if I was in this position, setting a call option on my Apple stock. So let me know if there are any questions and you want me to make content or anything else. Thank you very much. Bye.